Hi, good morning. I'm Joe Neighbour from Signal Centre, and this is a weekly roundup on the price of oil. So, lots going on in the oil space at the moment, as you can see from this chart that we've got on the screen, which is a daily chart. We are pushing to new highs on oil. In terms of the latest headlines, oil prices were a little hampered yesterday by weaker risk conditions and also a stronger dollar during Tuesday, while there was also a little bit of pressure for a correction. There is also some geopolitical concerns amid fears over further attacks in the Middle East, while OPEC maintained expectations of strong demand in 2022. The overall sentiment does remain pretty strong. It looks as though we are continuing to see buyers re-emerge on any dips and push prices higher. There was also a pipeline explosion yesterday which did curb oil supplies from Iraq, and that helped trigger a further advance yesterday in the price of WTI, posting fresh 7-year highs above $86.50 a barrel, and also Brent surged to 7-year highs above $88.50 per barrel. So all in all, looking pretty strong for oil at the moment. If we take a look at the charts from a technical perspective, we posted this key low here back in December, and we tested this trend line, which goes a long way back. If we just scroll back to the start of the pandemic, really, where oil went down and crashed down to lows of below $10 a barrel. So we've seen a couple of touch points on this trend line, and they seem to have been snaffled up by the buyers as they continue to push the price of oil higher. So we've seen a really strong move to the upside. Obviously, we've seen a bit of risk coming off in certain areas of equity markets, most notably in tech, but it seems as though that money is going back into commodities at the moment as if hedge against inflation. So we are pushing higher on oil. Most interestingly, we've got this first line of resistance, which is created by this level here on the 25th of October. And if we scroll all the way back to the left hand side, we actually have to go back to prices previously seen in 2012, November 2012, and above that, that low there from April 2013. So I'm expecting these two levels here to do a little bit of a job as resistance, and maybe reject prices in the very short term. So that first level that we just referred to, which was also in line with this previous high that was posted on the 25th of October last year, did nothing really. We just saw the bulls sever through that resistance level and continue to push higher. We are seeing a little bit of weakness today. We're down by 0.72% at the moment, so it's a little bit of a corrective feel to oil today, but clearly the overall trend remains very bullish. So the next level to consider is this 86.39 level. If we can get above that, then we really are opening up quite a bit of upside potential here. Lots of fresh air for this to move into. And again, I'll scroll back to the left hand side just to try and give us some reference for levels to potentially target. So as you can see, between that resistance level, we've got a big move lower which occurred back in 2014, but then we're looking for the sort of underside of those levels to target. So maybe up to sort of 92.26 as the potential next level to target on the upside on oil, provided it can get above this 86.39 level. So what I also wanted to do, just to try and add a bit of further color to the charts on oil, is take a look at the longer term time frame. So I was actually looking at the weekly time frame on oil and wanted to use the Fibonacci data points to try and really see if there's any opportunities within those levels that we should maybe be considering or maybe be aware of in the coming days and weeks. So I've actually gone back to the charts here on a weekly basis, and we can see this is from July 2008. So obviously we've seen a hell of a lot happen in the world since then, but this was actually back just before the financial crisis that took place between 2008 and 2009. As you can see, that steep drop off there in the price of oil. So by measuring from the high of that level to the low that we posted at the height of the pandemic, what we actually have is this red line here, which is a 61.8% Fibonacci retracement level at 95.66. So that's one level to consider. But when we get a confluence of Fibonacci levels, so we get more than one appearing in the same sort of region, that can often be an indication that we're going to get a bit of resistance or support form if it's on the flip side. So for me, what I've seen here is a 78.6% in a bit of a shorter time frame. So actually going from the high here in April 2011. So in the aftermath of the recovery from the financial crisis, we hit a high there in 2011, and then taking that high and measuring it down to the low, again posted as a result of the pandemic, we have a 78.6% level coming in at 93.23. So obviously, if we're looking at this on a daily time frame, then those levels will look quite far apart. But for me, there is a region here of resistance that we need to consider on oil, which may cap the upside in oil in the short to medium term. So between 93.23 to 95.66, and then above that, I think all eyes will be on that magical $100 a barrel oil price. Nice round psychological number to consider for traders. So at the moment, the outlook still remains very bullish for oil. No signs of that slowing. In the immediate term, we do have a resistance level at 86.39 on West Texas instrument to consider, which is this high here highlighted in red, and that's a level that goes all the way back to 2013. So important level there to watch, and if we get above that, then we start to open up the upside potential for oil, and we'll be looking at those Fibonacci levels as a potential area to target on the upside, to maybe consider fading into positions or to run your profits up to those levels. Hopefully that's been insightful. I'll be back tomorrow with an FX roundup, and next week with a further update on oil. Until then, trade safe. Goodbye.